Today on Law Next, we'll be speaking with Casey Kuhlman, the CEO of Monax, and one of the principal drivers behind something called the Agreements Network. Both of these are using blockchain and smart contracts to drive a new age of agreement making, contract making in law. This is Bob Ambrogi, and you're listening to Law Next, the podcast that features the innovators and entrepreneurs who are driving what's next in law. I'll get to my interview with Casey Kuhlman in just a moment, but first, let's hear from the sponsors who generously support Law Next. And now, on to this week's interview. Casey Kuhlman, welcome to Law Next.
Thank you for having me, Bob.
Finally get a chance to talk to you about what you're up to these days. And where are you today? I know you're kind of a world traveler, but where are you right now?
Right now, I'm actually with my family in Orlando, Florida. I typically am in the UK, although our company is split between Edinburgh, Scotland, and New York. So, and obviously, given the global nature of what we're doing, I spend, as you mentioned, a lot of time on planes and in various locations, which are not what I would call home.
I have to start by asking you about your background. You're an American-trained lawyer. As you say, you're based in Scotland now, but you actually started your legal career working in Africa. How did that happen?
Well, I actually need to go a little bit before I was a lawyer to answer that question. So I did my first degree in structural engineering, and then after that, rather than building things, I said, well, maybe I should blow them up. So I was an infantry officer in the Marine Corps, and then after that, I went to law school. And my background as a Marine sort of drove me to think that it would be very interesting as part of my law training to do something that was a little bit sort of out there from the typical path that many lawyers would take. And so I, as part of my as part of law school, I had gone to Sierra Leone on the western part of Africa to work on war crimes tribunals, and really was fascinated by the living in developing countries, and so when I was job seeking, as I was looking towards graduation and doing my job search, a job came along to be a legal advisor in a country in the eastern part of Africa called Somaliland. And so I jumped at that opportunity and ended up going there after law school and ran a project for a couple of years, had some young attorneys that I had been mentoring and working with, and then we all decided to open our own law firm. I like to say that I'm one of the very few entrepreneurs that people will meet that can say they ran their own law firm in Somalia before they moved into tech. And along that path, I had really been always a technologist by habit, and I was very interested in the ideas of how computers could run the contracts, which is sort of the next stage in my career when I moved fully into tech, which is what we're here to talk about today.
Yeah, well, you are certainly the first tech CEO I've spoken to who got his start in Somaliland. Were you in Africa when you were in the Marine Corps, or where were you stationed there?
No, I was in the western part of California, was where I was stationed. And then
a very exotic place as well. So.
Well, it was the middle of the Mojave Desert, which isn't ideal when you're 23, 24, 25 and single. But it was great from a sort of professional development perspective. And then I was there at the very beginning of Iraq.
So what was the practice that you were doing in Somaliland? What kinds of clients were you representing? What kind of work were you doing?
Sure. I did a range of work. It probably sounds exotic, although at the end of the day, it was pretty much just lawyering for small businesses. Globally small businesses, some of the bigger businesses there, and doing quite normal legal work from from a general practice perspective, in terms of employment work, in terms of import-export deals, in terms of corporate governance. I ended up doing a lot of employment and corporate governance with a smattering of other work in between, predominantly focused on the business side. When I had been running a project for an NGO, I was very focused on governance work and working with the government and houses of parliament to understand things from a governance perspective. And then when we opened our law firm, I was very much focused on the business side.
Yeah, I can kind of relate to what you said about the work being not all that exotic. Early in my career, I had a law practice down in the Caribbean, and people always used to think there was something exciting and exotic about practicing law in the Caribbean, and in fact, it's the same old stuff you do everywhere else, and just to some extent the same old drudgery of going in every morning and getting through the day.
It's pretty much you behind your laptop.
yeah. But I didn't have laptops in those days. But it was much better a place to be on the weekends anyway.
Yeah, that's true.
So how did you get from doing that in Somaliland to becoming the CEO of Monax?
Yeah, so what I had been focusing on latterly as a practitioner was, and some of this was driven by the environment where I was. And I found myself in a position where the old model of just being able to bill hours and sell your time was not really going to work for what I was doing. I was in one of the poorest countries on earth. And even though I was working on with some of the biggest businesses there, that globally does not really necessitate you being able to just bill a whole bunch of hours. And so I had taken the position that I should be focusing on one of my passions in terms of technology, to improve my own practice. And that meant how I did that was I had built a range of open source document assembly software and templates that allowed me to very efficiently and effectively onboard a new client or a new matter from an existing client, run through established checklists for a whole range of deals, and as I had those questions from the checklist answered, fill in blanks along the way, and within 5 minutes after an initial intake, I could have an initial draft to review with of a document to review with my client. And because I had been in this document assembly space, I was well aware of the limitations of what we could do from a technology perspective, which was that at the end of the day, this is a piece of paper that people are going to sign and put in a drawer and forget about. And I always felt like there was something much more that the computers could do for us in terms of understanding and tracking what have we agreed to and what are we saying has happened along the course of this deal. And I was well aware of the sort of old lineage of academic literature around this that was theorized in terms of computable contracts. And, people within the legal academy have been thinking about this going back at least to the 70s, of this, essentially this idea of the computers running the contract for us. It was never really actionable outside of a few instances. And the reason that it was never actionable is if you and I are in a contract together and we say the computers are going to run the contract, that might sound like a good idea. But then the next question becomes, whose computers are going to run the contract? And I don't want your computers running it, and you don't want my computers running it. So at the end of the day, the computers don't run the contract. And I had stumbled along. I was aware of sort of the ideas.
When you talk about computers running contracts, are you talking about smart contracts, or are you talking about something different than that?
To be fair, I'm speaking at this point quite generically because
Okay.
this was kind of a theory of the computers running the contracts pre the blockchain era and particularly the smart contract enabled blockchains. And in late 2013, the initial ideas around smart contract focused blockchains started to come into the zeitgeist, and I stumbled across them and fell down the rabbit hole very, very quickly. And I was really excited about what could happen when you have a general purpose computing engine on top of a blockchain. What you have is, for the very first time, in my opinion, for the very first time, a platform on which you don't actually have to have this question of, if the computers are going to run the contracts, whose computers are going to run the contracts. It takes away that part of the equation in a very elegant way, in the sense that now we have a community managed a system of computers that are all equally managing the running of the contracts.
So are you talk when you talk about computers running the contract? I mean, I'm thinking of an example of say I don't know, a particular company has a digital signing platform,
Sure.
and if you want to digitally sign your contract, you're going to be using that vendor's technology rather than a vendor neutral technology. Is that kind of what you're talking about?
That's a piece, but just signing a contract is only one step along a pathway.
Yeah, I realize it's only a piece, but I mean, is that
Yeah.
a sort of an example of how a vendor's computers are controlling the contracting process?
Yes, exactly. And another example is within the insurance space. So insurance have policy administration systems, which are essentially systems that track the rights and obligations that have been agreed, and those rights and obligations are managed by computers. In the instance of a large insurance company and an individual consumer, you don't have this question of whose computers are going to run this contract, because of market power differentials, the insurance company is going to run that contract. So that's actually a good example of where using traditional technology, you can have computers that will understand and track and manage the rights and obligations that have been agreed to between and across the parties.
So how does Monax get at this problem that you see?
Yeah, so it took us a couple of years. We've been, when the time I was talking about previously was late 2013, early 2014, and we're a dinosaur in the blockchain space at this point. We were the first to market with what's called a permissionable blockchain. Then we did on top of it systems of scalable smart contracts that could be mixed and matched for various use cases, and then we arrived at the time in which we were really needing to build something that had resonance within a single vertical domain. And so we, given where we had come from, what we decided to work on was the agreements network, and we saw a really large market opportunity that matched very well with the assets we had built up over the years. And so how we get at this idea of the computers running the contracts is we have an open public blockchain network called the Agreements Network. We're in the public beta stages of testing this network. And what it does is it allows anyone to upload a package of a contractual template, very similar to any templating system, a set of parameters, as we call them, which are blanks that you would fill in, and then a set of process diagrams that will be tracked and managed within the context of the blockchain. And these process diagrams essentially allow us to graphically define the legally relevant events that we want to track over the life cycle of a particular deal. And we track within one process model the things that happen before we interpret the contract to have legal force, and then those that happen after we interpret the contract to have legal force. And that leverages blockchain technology to do something that we've never really been able to do in previous generations of technology, which is to have a communally managed, not managed by a centralized party, system on which we can track our obligations, both visually as well as electronically. And we can use those to understand risk, to drive automation.
And so the agreements is the agreements network an entity of Monax, or does it exist as some sort of a separate business or entity?
So it's not an entity. It is just a set of code that people can boot and run and participate in according to the rules of the protocol that has been established. We are the
who sets those rules? Who decides on the protocol for that platform?
Right. So those are essentially who decides are the folks that will be running the what we call validators. They act as the operational backbone of the network, and we have a system wherein anyone can join that validator pool by essentially posting a bond or putting tokens of value into escrow. Then you can become a validator on this network, and what that means is that you operate technically the network from a day-to-day perspective, and then you also participate in the governance mechanism wherein rules changes are proposed to all of the validators, and they decide what they want to do with a proposed rule change. If they say yes, and the protocol updates. If they say no, and the protocol does not update.
So it's a private blockchain. Is it fair to call it a private blockchain then?
It's a permissioned blockchain, but it's a public.
What does that mean?
Yeah, so it has. So it's a public blockchain rather than a private blockchain, first off. It's publicly accessible. It's publicly available for anyone to join the validator pool. Anyone can transact on it, assuming they have tokens, etc. It has those characteristics of public blockchains. It also has a permission layer on it, which we leverage to essentially route new smart contract code that will be added into the protocol. The core suite of the protocol gets routed through a governance process, and this is different from some other public blockchains that allow anyone, assuming they have the money to do it, they can upload code, and that can be ran in the blockchain by the blockchain network. Because we're not trying to address a general purpose use case, but a more narrowly defined use case. We can take various optimizations, and one of the consequences of that is that we have built this permission layer that routes new code through the pool of validators. So they then approve new code getting added to the chain, and then anyone on the network can run it. So it's a little bit of a hybrid of what's coming from the cryptocurrency community, as well as what's been coming out of the enterprise side and the business side of the blockchain technology development curve.
Casey, stay with me. We're going to take a short break, and we'll pick up this discussion in just a few moments. Before we continue with our interview with Casey Kuhlman, let's take a break to hear from the sponsors who generously support Law Next. And now, let's continue this week's interview. Welcome back to Law Next. I'm speaking with Casey Kuhlman, the CEO of Monax, about his company and about the Agreements Network. So we've been talking about the sort of the foundation, I guess, of the Agreements Network. And help me understand how this kind of solves the problem of contracting as you saw it back when you were practicing law, and as I'm sure you continue to see it. How does this change how contracting is accomplished? Yeah,
I need to be very careful when I'm answering that question, particularly okay. to a legally focused audience, because a lot of lawyers have get a little bit obsessed with the making of the deal and the finalizing of a piece of paper, meaning that a contract is done. And what the Agreements Network is really focusing on is not what lawyers would typically think of in terms of making or creating or negotiating contracts. It's not actually really focused on those aspects of a contract's life cycle where typically lawyers would be involved, namely the negotiation phase, the redlining phase, going back and forth on drafts of documents. That's not really what the Agreements Network is built to deal with. What it's really built to deal with is, okay, we have agreed on on what the text of this thing looks like. So what we're going to actually really want to do from a business perspective, again, not necessarily from a lawyer's perspective, unless that lawyer was in-house, but from a business perspective, what we really need to be able to do is to understand from a life cycle perspective, where are we in the delivery of the rights and obligations that we have agreed to? Where are our counterparties as well? And so we, meaning the collective we of everybody that would be involved in a particular deal, where are we in the delivery of the obligations and rights that we have all agreed to do? And how can we use that to drive business decisions, an understanding of risk, and automation? And so let me kind of break that down, what that means and how we think about that from the Agreements Network perspective. And so if we think about a particular sale of goods contract, and we wanted to have a very simple sale of goods contract, this might be between a mid-sized importer in New York and an exporter somewhere in an emerging economy. And there are typically 5 legally relevant events that would happen over the life cycle of a sale of goods contract. They would be typically the buyer sends the seller an order, the seller sends the buyer the goods, the buyer accepts the goods, the seller sends the buyer an invoice, and then the seller pays, or sorry, the buyer pays. And so those legally relevant events you can model graphically into a system called business process modeling notation, and then take that business process model and upload it into the Agreements Network. And the process engine that we have built in the Agreements Network will track on the ecosystem level. It will track where are you within the fulfillment of the rights and obligations around this contract. So are you at the order phase? Are you at the fulfillment phase, acceptance phase, invoice phase, payment phase?
Are these what you refer to as archetypes?
Yes, and so this would be the uploading of the template would be the archetype, and then the creation of an individual contract out of that we call an active agreement. So if we analogize, an active agreement would be like a contract, a archetype would be like a contract template, and these process models allow us to visually define and understand from a business's perspective, where are we in fulfilling the rights and obligations that we have agreed to? And if you only have one sale of goods contract, can you keep that where you are within that contract in your head? Of course. If you have 10,000 of those and a relatively large business, you may not be able to keep all of that information in your head. And this gets at the sort of two key gaps that we are trying to fill with the Agreements Network in the panoply of legal tech solutions that do exist or are coming online. And we're really trying to get at the idea of being able to visualize and understand where are we in the fulfillment of the obligations, and be able to leverage that information to inform risk making or taking decisions by businesses. And then secondarily, we really want to be able to drive automation. So when, for example, if we take that same sale of goods process, when you get to the point in the process where it says send invoice, you can leverage this. You can leverage upper layers that are built on top of the agreements network, and this is what Monax is doing, to then have via API call send an invoice via your accounting system. And that's just one example of how we can start to drive automation. But the basic idea is to provide a substrate on which digital contracts start to drive your business systems, rather than contracts are just a thing that you sign, put in a drawer, and forget about it until something goes wrong. And this is what I'm personally very, very excited about, this ability of integrating digital contracts into existing business systems and using them to drive those business systems as the sort of a pinpoint of truth about a particular deal. For me, that's what I think is the most exciting thing that we've been working on over the last 4 years.
I mean, it sounds to me like, or you can correct me if I'm wrong, but it sounds to me like you're saying that it's kind of the traditional idea of what a contract is maybe no longer relevant in the business world as it exists today, and that we need to rethink how we enter into and execute and work through agreements.
Absolutely. I think that the what we consider a contract as sort of a writ large ecosystem it's built for the industrial age model. It is not built for the information age model. It's certainly not built for a highly networked, highly mobile, highly low touch, very frequent type of contracting. And those types of business models are proliferating, particularly when we compare to sort of older business models that would fully embrace the old idea of how we contract, namely, I'm going to have a lawyer, we're going to do a bunch of red line negotiations. At the end of the day, we're going to have a piece of paper that we're going to sign. Really, we're not going to worry about integrating this thing into our existing business systems. We'll just do the deal however we do the deal. And then at some point, if something really goes wrong with the transaction, we'll dig up this contract and then we'll litigate it, or we'll go to arbitration. Those models can't really work going forward, in our opinion.
So how does this apply to the average legal consumer, as opposed to a business, as opposed to a small or larger business? Does this have any relevance to consumers in general?
I think it does and it doesn't. It really depends on the context, and I go back to insurance again to answer this question. If you are an individual consumer and you enter into a policy with which obviously is a contract with an insurance company, then you will be essentially beholden to their computers. Their computers say yes, then yes. Their computers say no, then no. And their computers will be doing something like running a digital contract. And so in many aspects of pure consumer, you have so little market power vis-a-vis your counterparties that it's probably not a question on whose computers are going to run this digital contract. However, what we're seeing is an emergence of freelancers, an emergence of people that are, on the one hand, consumers, but on the other hand, their own business. The gig economy and the network economy more generally are taking off like wildfire. And the consequence of that is that essentially everyone is becoming their own business, or everyone that is participating in those economies is becoming their own business. And so I think that when you have that hat on as an individual, quote unquote, consumer, then you're more acting like a small business then you would be acting like a consumer. And in that instance, there would be a ton of relevance for your daily life, because again, you don't really currently have a place that you can go to understand where am I within my business relationships. And this network and the Monax platform, which is an application on top of it, gives folks that place to go to when they're operating in that mode.
One of the things you talk about in describing this network is that the producers of these archetypes who add them to the network can make money from doing that. You're suggesting that lawyers in particular can develop archetypes and eventually earn money through the network from doing that. How does that work? How do they become producers? Do they have to have their own node on the network, or what do they do?
Sure. That is a well-placed question for this audience, I hope. So how can you make money on this system? And so I'll get to the specifics of how somebody will do it in a minute, but if I can take a step back,
Sure.
if we think about writ large what we're trying to accomplish with the network, one of the major things that we're trying to say to the legal community in general is if you embrace this idea that we can, as a collective, rethink how we make agreements and what relevance those have to a digital and networked economy. And if you participate in that, particularly as an early mover, et cetera, there are real money-making opportunities here, in our opinion. So how does that actually work? Well, the basic ideas of what the Agreements Network can do is that there are two predominant using constituencies. One we call producers and one we call consumers. And producers are those that upload a package, which you referred to earlier, Bob, and as what we call an archetype. And that archetype includes, what traditionally you would have in terms of a contract template, as well as a denotation of what the variables are, or parameters are, as well as these graphical process modelers, and those process modelers, there's a specification, and so someone can define those in any not any, but in a whole range of graphical modeling systems. And they output to a standard, which is an XML standard. And that standard, that package of a prose template, a set of variables, and the process models can be uploaded via either our API or other API providers within the ecosystem. Or, of course, someone could run their own node on the network. We try to make it as easy as possible. And then that package will be on the network. There's a step along the way where someone, when the network is out of testing phases and into the live phase, as a spam prevention, we require producers to upload a few tokens along with this. So there will be a necessity to acquire a few tokens. And we do that again for spam prevention reasons. And so you could leverage a platform like Monax and others, we hope, that will be developed to offer you a means to package this system graphically and then upload your archetypes into the network. And when you do so, you can set a price, and that price will be paid in network tokens. Or you can set not a price and then expose that only to existing clients or new clients that you approve. And when you do that and they use the system, you can charge them via traditional billing solutions. So we offer both sort of mechanisms for lawyers and legal services providers to engage with the system. But that's the basic.
You mentioned tokens, and you will be doing, or you're planning to do, an initial coin offering at some point. When does that happen? How does it happen? What's the schedule there?
Currently, Currently TBD. And
Yeah. Okay.
one of the reasons that it is TBD is that we are in an environment where we are trying to build something that has relevance to the legal community. And in order to do that, we need to have a very clear understanding of what the risk profile is from a securities law, from a commodities law, from a money transmission, and from a whole range of other perspectives. And while a lot of people in the blockchain space have raced to do ICOs, and that, maybe they've been fine or they haven't, it won't really work for our use case. If we really want to have lawyers have the certainty that when they, go get a few tokens in order to upload this thing to try to make some money and see if this network has any relevance to the future of their practice, if they have an overhang of worry that these things may be unregulated securities and they may, by buying the tokens, have an unregulated securities transaction, that is very challenging, and so we're taking a careful and concerted approach to managing that risk before we go forward with launching the network. And in the meantime, we have a network that is basically has all of the technical pieces that folks can use and design solutions and leverage right now. And over time, as we control and finalize that risk threshold and are able to launch the network, we will do so.
We haven't mentioned this yet, I don't think, but the Agreements Network has a website at agreements.network, which has a lot of documentation about everything you've been talking about, API documentation, documentation on a white paper kind of explaining the whole concept, and a lot of other stuff there as well. So Monax is part of this. How does Monax make its money? Where's the money come from there?
So Monax itself is a SaaS. So we're entering our private beta, which is a very exciting step in the development of our company. And we're a SaaS company that is blockchain enabled. And so essentially we are a user interface and integration provider on top of the Agreements Network. And what that means is that we provide a graphical viewpoint and site that people can go to and interact with their contract, and that exists initially on the test nets of the Agreements Network, and then later on the live Agreements Network. And then also we will be providing a whole range of integrations between what happens on the Agreements Network, as well as what is happening in other business systems. And so if we go back to the very simple sale of goods example, when you get to the box in the process model that says send invoice, we will be one of the application providers that will be able to then connect you in to your existing accounting system and send the invoice on, and tell it to send the invoice on your behalf to your counterparty. And so the business model for Monax is very prototypical SaaS, with a customer segment focus for us on predominantly investment funds, as well as tech-focused startups, who together have very strong contracting needs on the one hand, and on the other hand are sort of your classic early adopters of new technology.
And where is the financing coming from for Monax, and how is the Agreements Network being financed at this point?
So we have engaged with investors on a couple of dimensions. We have we are traditionally a venture funded company from the Monax perspective. We also have accredited investors who have been early participants in the Agreements Network ecosystem, for which they have a predefined allocation of tokens when the Agreements Network launches, that they will have that will be allocated to them. And so this having a mixture of these two investment constituencies, we think is sort of the right mix for new, what I call ecosystem growth strategies that need both a more open source side as well as something of a more commercial and centralized company focused on the other hand.
Casey, as I tend to do all the time, I've gone way over the time that I've allotted for recording here, but I want to, before we finish, give you an opportunity to say anything further you want to say or add at this point. Any closing thoughts on what you're doing and what you're working on here?
Well, I will say that someone is going to figure out how to effectively digitize contracts and agreements. And when they do, a whole range of things are going to change for businesses, for consumers, and for the practice of transactional law. And I think that day is coming sooner than many people, many others may think. I am a partisan in that regard. However, I am very, very excited about the possibilities that when we start building digital platforms to really effectively digitize contracts, we're going to have a whole new world that's going to open up in terms of opportunities. And I'm really excited to participate in our own small way.
It's exciting stuff. I know the white paper refers to this as a paradigm shift from legal services to legal products. I look forward to following your development and what you're doing, and I really appreciate your taking the time during your, I guess, Thanksgiving vacation to spend some time talking to me today.
Thank you very much for having me, Bob.
Thanks a lot. Big thanks to Casey Kuhlman for taking the time today to talk about Monax and the Agreements Network. You can always find past episodes of Law Next at lawnext.com or at my blog, LawSites blog, which is lawsitesblog.com. A big thanks to my producer, Ben Ambrogi, and thanks to all of you for listening. If you like what you heard, head on over to the Apple Podcasts and leave a positive comment. We appreciate it. Until next time, this is Bob Ambrogi.